Okay, so now let's dive into the month-over-month stats. Again, month-over-month stats, we look at this because we want that bird's eye view of the market. We want to be able to see what is actually happening in the market and what the trend is. With our market snapshot, we're looking at what's real time. With the bird's eye view, we're seeing where the market is trending. So as we dive into this, keep in mind this is all lag data. This is sold data. So this data could date back to what was happening in the market as far back as May 1st of 2026. So it's not something you want to use for real-time decisions, but it does give you the trend of what's happening in the market. So what are we seeing? Number of listings was up 3% from June of 2025. Number of sales was up 5.6%. So what does that mean? That means the inventory went up 3%. So the market activity overall is higher this year than it was in 2025, June of 2025. The inventory went up 3%, but the sales went up 5.6%. The sales almost went up double, which means that it's a stronger market for sellers because those buyers are out there and they're buying the properties. So that's what this comparison gives us. Days on market, it was actually up a day from June of 2025. So it was 20 days June of 2026, and it was 19 days June of 2025. Pretty irrelevant, but it just means that properties are still selling for pretty quickly. Months of inventory, this is really important. Even though we have higher inventory, our months of inventory actually came down a month in 2026 versus 2025. You can see that right here. We were at 3 months and now we're at 2 months. The first time we've hit 2 months in over a year is May of 2025, last time we hit 2 months. What does this mean? This means that if no new properties came on the market and the same buyer activity continued, how long would it take for us to sell out of this inventory completely? It would take us around 2 months. Anything under 5 months is considered a seller's market. So 2 months is a strong seller's market. 5 to 6 months is considered a normal market. 6 months and above is considered a buyer's market. So this just tells us that supply versus demand ratio. June was an aggressive month as far as demand on properties here in Northern Virginia. What did the median house price do? You can see it went to $814,400 from $770 in June of 2025, a 5.5% jump in June year over year. So that's telling us that strength of the buying activity that we're seeing. We're seeing prices are still going up. We're seeing actually strong appreciation in June of 2026 versus June of 2025. Again, this is specific to the Northern Virginia market. You're probably hearing news out there that the housing market is down and so on. That does not matter. What you have to do is look at where you are and where you're looking to transact and know exactly what's going on. So what does this median house price mean? We were looking at the trends of this, but it's something, it does not indicate market value. And there's a difference, and I like to go over this every couple months just to remind everybody what we're looking at. So we're gonna look at the median house price in this very, very simple example. Median house price is the number that falls right smack dab in the middle of your entire data set. So it's not the average, it's not, there's no calculations, it's just the number that falls right smack dab in the middle. And the reason they use that is because when you have a large data set, you don't want really, really high sales to skew the number or really, really low sales to skew it in that direction. You want to get an idea about what was in the middle. Okay, so let's look at this example. Month one. We have 3 million all the way down to 220,000. You can see the median sales price is right here, $500,000. Okay, so that's month one, $500,000. Month two, you can see all of these numbers are higher than these numbers, and you can see all of these numbers are higher than these numbers. But the middle number that fell right in the middle is $400,000, okay? So if you're listening to the media, if you're listening to statisticians, if you're listening to what's going on, you know, how this is presented, they're gonna say that house prices are down 20%. Now, what does that mean to you? What does that indicate to you? That would mean to me, that means I can go and buy what was a $500,000 property for $400,000 now. That means the market's crashing. That means we're in a great opportunity. But you can look at this data set and you can see that there is no evidence of the prices coming down. The whole point of me showing you this is to say that the median sales price does not tell us market value of properties. It tells us where the shoppers were and where they bought in the middle. So we've seen periods where median sales price would come down $100,000, but that was because the interest rates had gone up, buyer activity was up, market values were actually up, but buyers had to look at a lower price point because of those interest rates going up. So property values were not going down. It's just buyers had to adjust to a lower level. Those property values were still going up. So you have to look at the whole picture, not just median sales price. I don't want to beat a dead horse, but I want to go through that with you real quick. Okay, so what does this mean? What's the trend that we're seeing? June 26 versus June of 2025, we saw market activity was up, both inventory and sales activity. We saw that we are in a seller's market because the months of inventory was 2 months, so it's 5 months or below, so it's a seller's market. And we saw that we had increased appreciation, not even just normal appreciation. We had a 5.5% appreciation. So that tells us that it's a strong market, lots of activity, and that's what you need to expect and be aware or be prepared for. Some people are still kind of waiting for the bubble to break and waiting for the market crash. Show you just a little bit of a documentation here. You can see this is up until 2023, so I don't have the new numbers here, but we know 2023 to 2026 have all been appreciation. In that time frame, it was an 81-year period. There were 73 years where the market was up. It could have been 0.5%. It could have been 20%. The market was down 7 years. Same. It could have been 15%. It could have been 1%. And the market stayed even 1 year. Okay. These 7 years, the important thing to look at is we had the 1990-91 recession. It was down a total of like 1%. And then we had the 2000s, the housing crisis. That was 5 of the years of the 7. So those are the only years that the market has finished down. If you look here, you'll see the market has never had a down decade. So for those of you that are waiting for a market crash or a market correction or housing prices to go back to a certain number before you jump into the market, history shows that that is a mistake, because what happens is you're sitting there and prices continue to go up. For example, we saw today that the median house price was $814,000 versus $770,000. So those house prices keep going up, so it's just costing you money. And even if there is a slight correction, the biggest correction we see on this graph was 12%. If you sit on the market for a period of 2 to 3 years while the market's going up 4% each year, you're at a net loss, you're at a net, and that's only if you happen to hit the 1 year, the biggest drop in market value history. So if you're on the fence, you're waiting for a market correction, you may want to talk to somebody, just kind of go through these numbers and see if it makes sense for you to make a decision to move forward now, okay? So all in all, it's a great market for sellers, great market for buyers right now, as we showed you on the market snapshot. And if you guys have any questions, please feel free to reach out to us, 703-783-2143. We'll see you guys next month.